I'm so excited this episode of In the Money with Amber Kanwar. I've got one of my favorite guests, Mark Sebastian of optionpit.com and CIO of Carmen Line. Mark, how are you?
I'm good. How are you, Amber? Good to see you.
I'm great, and
Excited to be here.
I'm so grateful to have you. I think you're our sixth guest on the podcast, so we're still in our infancy. And what I love about you, I mean, we've done a couple of broadcast interviews, and I know you're known for being freewheeling with your opinion, but how uncensored are you going to be now that we're on a podcast?
I as uncensored as you'll let me. So ask and you will get the answer. So let's that's what I'm excited about this. I'm really excited to get a deep conversation without all the commercial breaks and to really have that free flow with you. So I'm excited to see where this takes us.
All right, well, let's get started. The information provided in this podcast is for informational purposes only and does not constitute financial, investment, or professional advice. The views expressed by the host and guests are their own and do not necessarily reflect the opinions of any organization or company. The host and guests may maintain positions in any securities discussed on the podcast. Always consult a qualified financial advisor or professional before making any investment decisions. Well, it's great to have you on a week like this where things are so nutty. People think, tech is falling off a cliff because of the advent of DeepSeek. We saw a huge pullback in the market. You've got rate decisions, you've got interest rates to think about. The number one question mark is, are you still bullish for 2025?
I actually am. And I think some of the price action that we've seen makes me more bullish. One of the things I really hated about the rally for most of 2024 was how narrow that rally had been. It was really the Mag 7. I actually like to go with the Great 8 because I think you have to throw Broadcom in there now that it's a $1 trillion company and it makes up such a big piece of the S&P and the NASDAQ 100. But those 8 stocks basically carried the market's water for most of 2024. Without a lot of the rest of the market moving with it. So the last 2 years, the outperformance of the S&P relative to S&P equal weight has been astounding. And that is in long term over the last 30 years, 40 years, equal weight outperforms the standard S&P. I don't know if your listeners understand the difference between what the S&P is versus equal weight. I'm happy to
explain it quickly. Basically, equal weight just neutralizes the impact of the big tech companies and makes them all equal relative to, Nvidia has the same impact as a Johnson & Johnson. Whereas if your market weight on S&P 500, absolutely not. 30% of the S&P right now lives and dies by 7 stocks.
Yeah. So the S&P 500, that you're looking at when you see it scrolls across the screen, that is market cap weighted. Equal weight, spreads it across those 500 names, and it's a better way to judge kind of how the whole market is doing.
Well,
on Monday,
underline that point, because when we did see Nvidia fall 17%, the market obviously got taken down because it's so influential, but most stocks that day were higher.
Rally, yeah. So Monday, the S&P 500 was down, over 1%. Equal weight was up. There were more gainers in the S&P 500 than losers on Monday. It just so happened that those losers were those mega names. And so money leaving Nvidia, leaving Google, Microsoft, some of it flows into those lower names. Some of it moves to the sidelines. And kind of jump back into those, it appears, jump back into the NVIDIAs and a few of those names yesterday, because yesterday was the opposite, right? We had this really strong rally, but equal weight was down. So more stocks were down on Tuesday with the market up, and more stocks were up on Monday with the market down.
So the question,
that is how the weird market we're in.
The question becomes, which way do you want to play this? Are you buying the S&P 493 that you think there are more opportunities there? Or finally now, you can buy some dips in tech?
Well, was that really a dip? I'm not so sure. It was a dip in some, but not all. I do think there's going to be some winners out of this. I think you have to play very safe with Nvidia. Is this one of those kind of 1999, 2000 Cisco Lucent Technologies moments for an Nvidia?
Give us a quick history lesson. What does that mean?
Leading into the dot-com bubble, we were going to need all this telecom infrastructure and all this internet infrastructure, and Cisco was the Nvidia of 1999, and then post the year 2000 with the Y2K business investment kind of collapsed. People realized, hey, we're not going to need these massive deep spends the same way we thought, and Cisco goes through a 15-year growth drought, if you will. And, Lucent Technologies is now a part of, I forget who owns them.
And Cisco, I mean, it took a very long time to recover.
Yeah.
And it's like done decently well since then, but still definitely
20 years.
Yeah, 20 years.
It took them 20 years.
So are you saying the same thing could happen with Nvidia?
It's possible. There is an old saying, and this is something that farmers have known for hundreds of years. And the solution to high prices is high prices. And Nvidia has spent the last couple of years being able to charge exorbitant margins on their chips. That will not last. There are two solutions to that solution to high prices. One, competition comes on. So back and think about farmers, right? Farmer, now it takes a little bit longer than this in technology. I understand that, but corn prices go to $7 a bushel. Farmers that were going to plant soy switch to planting corn. There's more supply. Corn prices drop. All right, that solution to high prices may be further away. I know Intel's trying to do it. AMD, Google, Apple. I mean, everybody's trying to make chips to compete with Nvidia. That's still in the future. Now, here's the other alternative. Corn is $7 a bushel. Well, you know what? Instead of frying my, McDonald's fries in corn oil, I'm going to flip over to canola or vegetable oil, or soybean oil or something like. And folks, I don't want to get into a seed oil discussion. I know we're going to get tweeted at on this. This is a financial discussion, not a health discussion. So what we may be seeing in Nvidia is that solution to high prices was, we're going to find a way to not use these ridiculously expensive chips, be able to use old chips, recycle old computers, use slower technology to solve the same problem.
So it sounds like you wouldn't chase Nvidia here. The big question is, do you think the spend by these so-called hyperscalers, so like Amazon, Microsoft, Meta, which are spending billions upon billions, in part to buy those expensive chips, do you think that starts to come down? Because that really pulls at a thread, right, for this whole sector.
That, I think, is up in the air. I don't know. So we don't know the full story here. I don't think you can make that assumption, make any assumptions yet. Because I don't think Meta or Microsoft or Google know the answer to that, let alone myself.
This is just one part of the conversation when it comes to the markets. And you said you're bullish. One thing that this DeepSeek issue has overshadowed is tariffs, especially sitting here in Canada. And I know you're in the US, but it looks like it's a green light for tariffs unless there's some sort of breakthrough. How does that factor into your thinking? Because that's going to be a real cost for everybody.
It's funny. Until it actually happens, I kind of act like it's not going to happen. I know there are real threats. I mean, the United States enacted tariffs on Colombia for approximately 8 hours, something along those lines. Deadlines create deals, and we've seen in the past. I don't think anybody really wants it. I don't think Canada or the United States wants a trade war. I don't think Mexico does either. And having watched this 4 years, 8 to 4 years ago, or even 9 to 5 years ago, whatever it was, how many of these outside of China, where that is a real risk? How much of this tariff trade back and forth actually ended up being enacted? And the answer is not that much outside of China. So I think this North America trade war blitz, probably not much ado about nothing, but you've got to watch what happens overseas. That's where the real fireworks would be.
If you don't think it ultimately derails where the S&P goes over the next year, you've got to imagine, though, it's going to introduce a lot more volatility because we're playing chicken with really high stakes game of chicken.
Yes, you would think. However, if you look the front end, if you look historically at Donald Trump's last term and you look at the volatility index, the VIX, the very first few months, there was a lot of movement in the VIX up and down. 2017, so the year, kind of the back end of 2017 through most of 2018, post the volatility apocalypse, with XIV and that big vol complex blow up. I don't think we need a history lesson on that. The VIX was pretty low, and all the way through 2019. It really wasn't until COVID started to heat up that volatility got over 15. So don't be surprised. Sometimes the expectations for volatility can actually lead to lower volatility, because when people go out and buy their protection and then nothing happens, they hit the exits.
Well, that's an interesting call. So, headline volatility, but maybe not a lot of market volatility. Last thing we've got to talk about is interest rates and the rate picture. The Fed lately has been a bit of a headwind to the markets. The last time the Fed made a rate decision, we saw a big implosion in stocks. But importantly, maybe one of the consequences of this DeepSeek freakout is bonds have started to calm down a little bit. What is your kind of outlook there? Are you concerned that interest rates are, the common thing is, well, if interest rates are a little bit elevated, that's a headwind for stocks?
I don't think interest rates are elevated if you look historically. This is where rates have always been, except for that donut hole in, between kind of the financial crisis through probably the end of the COVID. 5% pretty normal. Ask my parents about getting a mortgage back in 1972, whether they would take 6%. The answer is yes. So, but you're not wrong in that the rates are so important to the overall market, and it's not so much whether rates go up or down. It's really about having some stability and some the ability to see where rates are going to be. So rate volatility is going to be the enemy of the market, and this speed with which they do. Now, if we get a quick sell off in bonds, that's really problematic for the market. But kind of a slow progression sell off that takes months and months and months and months, I don't think that's as big of a risk.
All right. Well, that's enough macro for me. Let's get into the fun stuff. I love stocks, and I think you do too. So let's dip into the mailbag. Our first question, and I love this one because this is where the uncensored part of Mark Sebastian is really going to come out. This one's coming from Rohit. Back in September, you suggested Intel was a buy. Do you still hold that view? Can the stock turn around? And just as a little history lesson, Intel, I'm going to just derail this conversation right away. Just as a little history lesson, Intel's trading around the lowest level since 2010. It's basically missed out on every single major development in semiconductors. Yeah. And the only thing Intel has been good for in my portfolio has been tax loss selling.
Yeah.
With all of that in mind, Mark Sebastian, do you still like Intel here?
Back in September, Intel was about $22. It's currently about 19. So what I will say is, normally when I like a stock, I go out and I'm an option trader, folks. So normally when I go out and buy and I'm really liking a stock, I'm jumping in the derivatives market because I can typically figure out, what's my investment duration, what kind of movement am I looking for, and then I can look at volatility markets and figure out how I want to play it. With Intel, because I can't figure it out. I still think the sum of the pieces are worth more than where it's currently trading. I mean, just their investment. I mean, what's their ownership in Mobileye worth? I've thrown up my hands and just bought a couple hundred shares. And I'm just sitting on it. And it's been dead money. And every day I look at myself and I go, why am I doing this to myself?
Why are you
Why?
doing this to yourself? Like, so
I
you
don't
just
know.
think it's, and I think that's how Intel lures you in.
Yeah.
It's a value trap because you think it can't go on like this. There is some value in there. And it becomes such a heartbreaker, but I'm going to challenge you in this. How can you be bearish Nvidia and bullish Intel? That
I mean,
doesn't make a ton of
I'm not.
sense.
You're right. You're right. Well, what I would say is this is one of those just relative. It'd be a relative value play, right? Intel's worth less than the sum of its parts. There's a reason why there are firms out there sniffing around to buy them out, right? Nvidia, it is a $3 trillion company that makes that makes chips, and we just saw one tiny bit of news, right? This is the largest company in the world dropping 13%, and over the last couple of weeks, you'll know that is the increase in volatility on these mega caps has been pretty astounding. Uh, Nvidia since the beginning of the year has had, let's see, it had almost a 10% drop on January 7th. Obviously on the 24th, we had that huge drop. We had a massive rally the following
So
day.
I'm glad that you're bringing up the volatility in Nvidia because it loves to drop 10%. It does it all the time. Yet if you zoom out, you're still up 100% over the last year on
Oh,
Nvidia and you're down 54% on Intel.
I get it. I'm not. I look at Nvidia. I'm not bearish Nvidia. I think Nvidia is a trade. Okay, that volatility that you're seeing, it, Nvidia is basically back to where it was in May right now. Yeah, kind of June May period. And has kind of started really trading in a range. I think Nvidia is a great trade. I'm just not as certain on the long term, whether now that it's $3 trillion, if I want to own it for 10 years, is it going to be $6 trillion? Is it going to be $10 trillion? Or is there better places to put some of my money? Or are they going to start putting out a dividend? What is the long term there?
All right, so you're more short-term oriented on Nvidia and maybe more
Yeah.
fingers crossed on on Intel.
Yeah. Sorry on Intel,
That's
everybody.
all right.
Feel
Okay,
free to
let's bring in.
rip on me on Twitter, folks, or X. Sorry.
Yeah, how do we reach you? At Option Pit, right?
At Option Pit.
Okay,
Yeah.
yeah. Don't send that to me at Base First. Send that to at
Send it to
Option
me.
Pit. And that could go both ways because this could really work. This could finally be the year for the contrarian play on Intel. Tesla, equally as controversial.
Mhm.
That's where our second question is coming from. This is from Dennis. Considering the Tesla sales and stockholder equity have seemingly reached a plateau, isn't the stock way overvalued at 113 times earnings? On top of that, it's not clear how Elon Musk's massive, nearly $60 billion compensation package factors into the balance sheet. There's a lot of questions. Almost none of that has to do with, hey, how are EV sales doing? Because that's the real business that they're in.
Tesla, you're betting on their automated driving and EV and charging stations and the quality kind of crowding out the crowding out kind of a lot of the competition, which we've actually seen, right? I mean, GM and Ford have actually stepped back a little bit from EV, while Tesla is the only company that's actually been able to make money doing it. But all those criticisms around Tesla. Now, let me be clear: I don't own any Tesla, But a lot of those criticisms, and you could throw this right back at me on Nvidia, because I made the same criticisms about Nvidia a year ago, right? Um, all those criticisms that he just laid out, they've been laying out for 10 years, and the stock just keeps going up. And I wish I would have thrown out those criticisms and thrown on 100 shares in my account and just sat on it, because I'd be a whole lot richer.
I mean, that's why this is a frustrating stock for some, because you're looking at a company that's poised to grow total sales by 3%. Profit is actually falling. And the real enthusiasm for the stock, quite frankly, seems to boil down to a friendship between Elon Musk and Donald Trump. And like, is that what America is becoming? Are you investing based on like who has pals in the White House?
The funny thing is that all the EV mandate and stuff. I don't know if that works in their favor or not. I don't think
That's right. So
it's
the Europe is going to
interesting.
pull support, right, for
Yeah.
the EV sector. And people say, well, that's fine. Elon Musk has got other skin in the game, let's say through robo-taxis, right? And so having
Yeah.
one in the White House is going to be great because it's going to make it really easy for regulation and stuff like that to get robo-taxis done.
You look at the stock, and the answer is probably yes, but it's not something I overly concern myself with how that Washington relationship is, because I think politics provides a lot more noise. Politics stops people, using politics as a major part of your investment decision-making decisions. Apparatus stops people from making a lot of good decisions and gets people to make a lot of bad decisions, like investing in gold
Or Intel.
or Intel.
I will say they got a lot of money from the government. I'm really going to hold your feet to the fire on that one.
Right. If you read all those government the billions of dollars in government contracts, and then look at what Intel has done, and there's your answer.
I mean, all these tech CEOs are trying to curry favor with the administration right now. So I hear you that you're not really trying to let that factor into your thinking. One of those CEOs is Mark Zuckerberg, and we've got a question on Meta. Meta is sitting near record highs. Is it a buy here, or is it overvalued at these levels? This one coming from Charlene.
So this is an interesting one, because I want to talk about an option trade that went up on Friday and Monday. And because you will understand this and you will think this is really fascinating. So now, one of the reasons why I think options are so important is that they are, on a daily basis, more money is flowing through options than the stock market here in the United States. And so, especially with a name like Meta, I'm paying really close attention to kind of what do the option flows tell me. And on Friday, a trader stepped in and bought the 1,250 call expiring in January of 2027.
A call meaning you're betting the stock is going
Goes up.
It trades at around 670. The bet then is that it goes up to over $1,000 per share.
Over $1,250 a share. They paid a pretty penny to that. And they added more to those positions. So when I'm looking at a name like Meta and trying to figure out what I think, we call these option fingerprints. I look at, are institutions accumulating mid to longer term large option positions? It's a really efficient way to get yourself into a stock, not have to report that you're long that stock on your 10Ks, right? Because options are not technically direct ownership, so it doesn't fall under that, under those sheets.
So a big hedge fund could take like a closeted position in Meta without having to disclose it.
Yes. And so right now, currently, there are owners of 66,000 of the 1,250 calls expiring January of 2027. And to put in perspective how much money that is, calls are currently $31.
Mm-hmm.
So $31 times 66,000, I'm going to do the math here, times 100. They currently own $204 million in call premium. That is one of the most massive single equity bets I have ever seen.
They could be wrong, though. People make wrong bets all the time.
They could be wrong, but they're not. They're typically not throwing $200 million of leveraged call premium at a stock to be incorrect. Now, sometimes there's other pieces to this that can go up over the counter. You have to be careful. But when I did some investigating, this is just a straight call buy, and again, one of the largest trades in a single equity in terms of raw dollar amount that isn't in. I've seen bigger in like the S&P 500 and the NDX, but in terms of single equity, so like a Meta or an Apple, this is one of the largest trades I've ever seen. I've been looking at options for 25 years.
Well, that's pretty wild. That's a tell. And I love the way you described it, like fingerprints. And so this is maybe telling you what people are saying. And so it's directionally bullish, right? Directionally supports the stock moving higher. Let's talk about what fundamentals could get us there. What do you think that is? And I'm curious whether you think, and like not to go back to DeepSeek, but if all of a sudden you can do the same sort of thing on cheaper chips, is the market going to be less comfortable with the billions that Meta is spending on AI? Because right now they've allowed the company to do that because they say, yeah, you got to do it. It's an investment year. But what if that changes all of a sudden? Could that punish the stock if they don't bring back their spending?
You can have your criticisms of Mark Zuckerberg, but one thing he's not is stupid and not willing to shift gears. So if they figure out they can run this AI stuff much more efficiently and cheaper, they will flip on that, I would imagine, aggressively. And when you look at the fundamental case, going through kind of do we just kind of consider those 8 stocks, Amazon, Apple, Google, Nvidia, Tesla, Microsoft, Meta, and Broadcom, do we kind of consider them their own kind of almost their own sector? Like, should we call it like the great 8 sector?
I think so, because right now Meta lives in the same sector as the telecoms, and that has always bothered me.
So the trailing PE on Meta is 31, which for a $1.7 trillion company is astronomically high historically. But let's put in perspective of the rest of those 8 names. Nvidia, after getting a little kneecap, is all the way down to 51. Apple is at 35. Microsoft 37.
And these multiples are how much people were willing to pay, how much over and above what the stock earns were people willing to pay. So for Meta, 30 times, Nvidia, 50 times, Apple, 35 times. So those are still relatively more expensive than Meta, is I think the point you're making.
Yeah, absolutely. And so if they can integrate the AI and now they can do it cheaper, they are potentially a huge winner. Especially, they've got kind of their different pieces within them, and I also think there's other areas where they have the ability to monetize more. I'm still not sure how they're gonna fully monetize the WhatsApp portion, which everybody's on. There's big upside there. Instagram continues to be strong. It's just kind of Facebook that I was trying to explain to somebody. What do you mean nobody uses Facebook anymore? I told this client, I was like, yeah, you and I are on Facebook. My 15-year-old's not. He's on Instagram and TikTok.
You've got a bigger checkbook. So maybe it's okay that you're still on Facebook and they own that platform. Let's get one more tech question in before we talk about other sectors. You already talked about Apple, and you have been very uncensored in the past about Apple. So bring that energy here.
It got a bigger multiple than Google, who is working on their own AI and just announced major breakthroughs in quantum technologies. They have a bigger multiple than Meta, who is, again, deep in AI, growing stuff. They've got all kinds of social media. They have a bigger multiple than a lot of major names. And what innovation do they do? And the goggles.
Everyone needs to stop making goggles a thing. It's just not going to work. We don't want it. We don't want it.
So
Nobody wants them.
my 2 bones to pick early in this year. All right. 1, goggles. Stop with the goggles. And 2, Jack Dorsey.
What about him?
Square. All right. Or Block Inc.
Yeah.
They changed their symbol here in the United States to XYZ. Do you know how big of a pain in the butt this is for me, Amber?
Why? Tell me.
So now over my life, I've probably written, I've written 2 books and I've written, I don't know how many different posts. And when I'm giving a theoretical example of a stock, when explaining an option trade, do you know what stock I've used thousands and thousands of times?
They ruined it for you. What does this have to do with Apple?
It has nothing to do with Apple.
You just saw a platform and you're taking
goggles,
the opportunity.
The goggles.
The
You took me off
okay.
again. Sorry, folks. That'll happen.
Okay, let me get you back to the road because Jesse's question is about Apple specifically, which is why did it rally when every other tech stock was selling off on DeepSeek fears?
Apple is no longer a growth stock. It's a safety stock. Apple has replaced the 10-year, in a lot of ways, has replaced the 10-year treasury. It has replaced just about everything. So when people are scared, Apple will typically go up because it is your flight to safety stock. Along with, we did see some money actually flow into treasuries on Monday, which was a good sight. But within the equity markets, when I'm scared, I get out of my high beta. Now, high beta means stocks that are going to be more volatile than the S&P. So when I'm scared, I get out of high beta and I roll into Apple and that soft, warm blanket of the iPhone 16.
Why not have that? I would love a soft, warm blanket. Why not just keep it in the portfolio?
I think there is a long-term case to just hold Apple. It's never going to hurt you. I just don't see the growth. That PE, they're going to need some earnings growth over, they get some earnings growth. Where's the revenue growth? Where's the innovation? It's kind of slowly turning into a utility. Those are great to own. It's going to give you dividend. I just don't see the dramatic upside in it anymore.
The funny thing that was going around on Twitter is Apple was trading up when everyone was freaking out about DeepSeek. Was like, because they never invested in artificial intelligence in the first place. Like it's not an AI stock and it's finally paying off for it.
I think that is damning that they're not an AI stock and they outsourced it to, whomever. And the fact that Google still does their search, I think it's not great.
It just spits out so much cash. It's just a beautiful cash machine. Everybody is like, I'm glued to the device. It's there. Why does it need to innovate? It's there. It's doing.
It's a flight to safety.
Cash flow machine.
It is a flight to safety. But if we have a broad market rally, you will see it get left behind, and not that it's going to drop. It just isn't going to, I think, capture the same gains as most of the market over the next 5 to 10 years. If you own it, sit on it, let it pay you some dividends. It's not something that I'm looking at add to anything I would invest in.
All right. Well, we've accidentally only talked about tech stocks, even though you're saying there's life outside of tech stocks. So let's go in one question about life outside of tech stocks. This is coming from Karen. What are your favorite plays in North American energy right now? Do you like that sector?
Well, it got thrown a curveball. It got thrown a huge curveball on Monday. I was talking to my CTO about this, and he thinks one of the big ramifications here is that if DeepSeek can do this with fewer servers and less power, the ramifications on what was going to be this massive nuclear energy buildup, that changes the entire narrative.
Are you shorting nuclear?
I'm not shorting nuclear, but again, they were so bullish until Monday morning, and we saw the big turnaround in XLU and in these nuclear names. SMR, this was one that I bought for like $2 2 years ago, and it was at $30 on Friday, and hit a low of $18 because what is going to be the energy man?
NuScale Power, for those that are listening, and the ticker, as you said, is SMR. Would you? But there's going to be demand for power, right? And AI isn't even really the big driver right now. It's the hope that AI was going to be the driver. Is there anywhere where you've seen an overreaction?
Yeah, so I think the big thing about what happened over the weekend with DeepSeek is that it may be a sea change for multiple industries, or it may not. And sometimes you have to just not jump to conclusions and dive in. But the initial reaction is bad for nuclear. But after getting kneecapped, maybe there's an opportunity. The initial reaction was, it was bad for the chip sector kind of across the board. But it was good for those that kind of sit on top of AI infrastructure, names like Palantir and Reddit, CrowdStrike. They were big winners coming out of Monday. That's why Meta turned all the way around on Monday as well. So in terms of North American energy, a lot of the oil names still look really soft. At some point, Occidental Petroleum will get back over $50. That's been another terrible pick of mine.
And guess what? You're in great company because Warren Buffett owns that one too, and he's probably not happy with it either.
Occidental Petroleum and Devon Energy, which is kind of a play on both oil and nat gas, are both interesting energy plays at the valuations they sit at. If I'm deciding between Exxon or Chevron, I'm probably going Exxon on the mega energy side.
All right. Well, now it's time for Mark's Pro Picks, his best ideas. This segment is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information.
You heard that. atb.com/inthemoney.
In the money.
You gotta.
I mean, that's for you, right? You're Mr. Options. You gotta love that title.
Absolutely. And we gotta keep Amber's lights on, and we gotta, so smash that link, folks.
Thank you very much.
Get out
There's
there.
a man who knows how to sell the advertisers. Let's see if we can sell these stocks just as well. Maybe better than your Intel pick, because I was hard on you for that one. Your first pick, small, Reddit. What do you like there at Reddit?
They caught everybody off guard on their last quarter when they basically said, surprise, we've basically cracked the code to being Meta 2.0. And when you look at the user base, the daily active users, the amount of people, the amount of sheer volume on that, and who's using it, young people, millennials, Gen Z, all the way up to older people. It steers younger, but it doesn't have a lot of that kind of Facebook issues in terms of just old people. So it's got a really wide audience, and they figured out how to make money off of that. I think this is that sea change moment, that big aha moment for Reddit, where it sees that I think a potentially huge jump in valuation. Now, we've already seen it go from 15 million to 30. If it follows kind of the same path as Meta, and Meta has kind of laid out kind of the entire model for them to become wildly profitable, then this is $100 billion company, maybe $250 million, or maybe 250 billion, 500 if they keep growing. So this is the one stock that I am kind of buying, shutting my eyes, and forgetting about it for a couple of years. And I think I'm going to end up owning about four to 8x the amount of shares that I currently own if I wait a couple of years.
So you see a big double here. I have a couple of questions. One, that Meta link is interesting because everybody was looking for a while for the next Meta. It certainly wasn't Snap. It wasn't Twitter. And so you think that Reddit has the best shot of any other social media company of following that Meta playbook?
I think they've shown they did. In that last quarter, they basically said, yeah, we're following the Meta playbook. And the amount of data that they have is astounding. I mean, they're next to Meta that I don't think anybody's got more than them.
So here's a question. How long does Meta tolerate that before trying to buy it?
You know, that's a good question. I think they'd run into regulatory issues, but I could definitely see somebody trying to scoop them. But at what multiple? And, I think this is not a company that will sell itself for less than, $100 billion or more. I mean,
and right now it's about $34 billion.
Yeah. To put things in perspective, it's currently $34 billion. Roblox, which does not have nearly the user base, is worth $45 billion. Reddit is worth more than Roblox, folks.
All right. Maybe you're a glutton for punishment, and that's where we get to the second stock, which is Boeing. Another problem child, just posted a huge loss, and the stock actually surged on the after their quarterly results this week. It lost some of its momentum, but I mean, you got to have such high conviction, do you, that Boeing's big issues with making jets that don't fall apart in the middle of the sky are over?
This is kind of another one where we're looking at a combination of it's been so bad, but and this is one of the mistakes I think I made with Intel. This is something I've really started digging into in the last 12 months, was using these option fingerprints more in my investment making, and the amount of kind of long dated open interest that started to on calls. Again, bets that Intel's never going up, folks. Bets on Boeing, that Boeing is going to rally. We saw a large increase in that behavior over the last 4 to 6 weeks. And as it was trading kind of off the lows, but still kind of below here in that 165, 170 range, we started to see traders start to build call positions in the 180s up to 200s, even as high as 220.
And I don't want to be too harsh on you, because you can make a lot of money in bad stocks that are turning around, right? A stock that's going from bad to good, before it's at good, you can make a lot of money. In their quarterly results, though, they still no outlook for 2025. And there's a new CEO, so there's a lot that they need to kind of get their head around. And the question is, does that lack of just guidance or forecasts create a little bit more uncertainty on that turnaround bet?
Yeah, I mean, unless you think they're like just completely done for, these big American companies that go through these periods, other than Intel, eventually do turn it around. The example you're kind of hoping for is like a 3M kind of play here, where it gets completely kneecapped, or a Starbucks, right? It gets completely kneecapped and has had a pretty nice turnaround over the last 6 months, after kind of slowly evaporating over the last 2 years leading into that. So you're hoping for, this company had some major issues, and now they're coming out.
All right. Amazon has no issues, it seems. The stock is trading close to all-time highs. It wasn't dented by the DeepSeek market freakout. So you want to add here? Amazon is your third best idea?
I mean, I think it's just one that I'm not adding at all-time highs, but when it pulls back, I'm going to accumulate. This is again more of kind of a momentum trade that I I'm primarily an option trader, so this is one I'm playing more on the derivative side than in the stock itself. But yeah, this thing gets if we get a big pullback and Amazon gets anywhere close to 200, two hands in.
All right, it's 240 right now, so you need to see a bit of a pullback.
Yeah, you need a nice clip.
Buy.
You need a nice clip.
All right. Do you have anything you want to say on Intel? Because I feel like you started bullish and now I can see the regret already.
No, I mean, like I said, it's worth more than the parts. I'm just, I gave up trying to trade it. I just threw, a few $1,000 in it, and I'm shutting my eyes and hoping they turn around. But I'm probably just, I probably should just give it to my 15-year-old to invest in Air Jordans or something like that, and I'd be doing better.
Crypto. They don't invest in Air Jordans.
Oh, that's true.
They're
Crypto.
all in on Bitcoins. Mark, thank you so much. What a pleasure to have you on the show. Thanks for joining us.
Oh, thanks, Amber. It was awesome, and what a great show you're running. And I know you're going to have huge success. So I'm not going to wish you huge success. Because I've got so much confidence in what you're going to do. So congratulations on the new show.
All right. Thank you so much for that, Mark. And for everybody else, stay tuned. Our next episode, we've got Barry Schwartz, another guy who loves to be uncensored with his thoughts. He's the Chief Investment Officer at Baskin Wealth Financial. He can also talk pretty much any North American large cap. So get your questions in the Money Pod everywhere on social media. You can email us questions@inthemoneypod.com. Check out our website, www.inthemoneypod.com. And we'll catch you on the next episode.